Friday.
Are we live?
Live.
Welcome,
show.
everybody. Hola.
Hello. Hi.
He's getting better at the Ola.
Yes, he is.
Show countdown.
You're perfecting the Ola.
I kind of like the show countdown thing.
Yeah, I like it too.
Yeah. So, yeah, it's not real. You know, I don't consider this a synthetic. I hate the term synthetic Friday.
You hate
Everything.
that has anything to do with fun and a weekend. Okay? If it's
Correct.
like, right?
Yeah.
Like, I hate.
That's exactly it.
Why do people talk about the weekends? Why do people talk about what they're doing? Who cares?
Everybody cares except for
I
you.
don't understand why people get all excited about a
Here you
Friday.
go.
I mean, it's like, you know.
Oh my
What's the
God.
difference between a Friday and a Monday? It's a day that ends in
I
Y.
get to be with my family.
Who cares? Overrated.
Overrated.
Okay, no. No, you're
so,
wrong. You're
So
wrong.
I am with you.
But
I'm with
My family, overrated. What else?
okay. Well,
You get-
everybody
you
else
get some
loves
you-
their
you
family.
get
They
some
want to
you-
spend time with their
And
family.
you get you time.
I spend time.
And also you get you time. You get
You
to
get you
sleep
time.
in.
Yeah, you get you time. Who cares about sleep? Overrated. Keep what else?
Overrated.
It's a waste of life.
You get to have
See, you're better off if you wake up. What time do you wake up at? What time do you wordle today?
Okay.
1? That was a good one today.
12:30. I don't remember what it was.
Well, you can't say it because in case somebody hasn't done Wordle, I don't want to say it. It was a good one, though.
Was it a hard one? I think it was a hard one.
Well, I mean, isn't it all, it's subjective, isn't it? Let's see.
I think it is.
Here.
I got
You probably didn't do it, so I'm going to show you.
No. I did it.
Yeah, see, you don't even know what this means. It took me 5, and...
Hold on. Wordle. I mean, just see, because now you got me thinking, because I did it at like 1 o'clock in the
play Wordle?
morning.
I don't, but I want to.
So you can start playing, but I'm not going to show you what
Hold
it is. Do you know what the
Okay.
game is?
Yeah, yes, I do.
Okay.
I was thinking about doing it in Spanish actually, but
Just
I can give it a
just
shot in
to show
English
off.
too.
Oh,
No,
it took me
because
6.
English-
I got him 5. Don't show her.
I can't read from here.
Okay, I got him 5. Yeah. Oh, that's pretty good that's a pretty good guess. You used a solver?
No.
Yes, you did.
I had
You used
I
a
had 4
solver.
letters.
You lie.
Yeah, for sure.
First of all, I didn't even know what this. I'm not sure I even knew this was.
Right, I had to look it up after I'm like, wait a minute, what is this?
What does it mean? It means like.
No, don't say
Don't
it because
say
then
it.
people are gonna get what it
That's true.
is.
Yeah, just don't say it.
You're horrible. Like,
Yes.
good thing you don't watch shows
Yeah, 'cause
or
you
go to
spoil
movies or
it
do anything
every
fun
time.
because then you would ruin it.
Yeah.
Like if you could, you would tell the end of a game, like what the score was. Oh my God, did you see the last play if you could do it?
Yeah.
Yeah, you know what I really. You know what of my pet peeves is?
Oh my God, here we go.
won't even
People who record games,
People who record games.
the worst.
Drives me out of my mind.
Totally agree with you. I'm like, what is the point? It's the sports version of leftover food. Like, why?
Right.
It's already happened.
Right.
Wait, you agree?
Totally agree. Like, when I hear people say, I recorded it, don't
Drives me crazy.
tell me what happens. I'm going to go home and watch the game. Who cares?
Because
It's over.
the pleasure of watching the game.
Yeah, but it's over.
It's over. I don't
And
want
you know it's over. And if you tell me that you're not thinking that it's actually over, but you're watching the game and you fast forward through commercials?
Yeah.
No, the worst. Totally
Okay,
agree.
well, we record everything because we don't have time to watch it live, and we still
wait,
want to
you're
watch
one-
it.
You're one of those people?
Yes.
What do you watch?
Sports events?
Totally.
Like what?
Yeah, give-
Tennis.
No, you do not.
Yes, oh my God. I probably still have on my DVR from.
You have a DVR?
I still have a DVR. Yes, I still have cable. Probably still have on my DVR
You're-
from 2 years ago, like the French Open.
How many times have you watched it?
Seriously. Then you're the only person
Yes.
in America
Yeah.
that
No,
would
I
save
doubt
the
it.
French Open from 2 years
Was
ago.
that
doubt
did
it.
Rafa win?
Of course he did. No, not from 2 years ago, but anyway.
Because she's
I do.
She's a Rafa fan.
And we also watch soccer. We record it and
It's
then we
not-
watch it.
Okay, I'm not getting into that.
But
We'll leave it alone.
But we will
we'll
agree
leave
to
it alone.
disagree.
We will agree.
I'm gonna let this go, but
Okay.
it's
You're in the minority. We'll leave it at
it's
that.
not cool. You're just being
In this room, I'm the minority.
you're just
well-
being a good soldier. That's all you're doing.
For sure.
I
Yeah,
wonder.
this is
Because there's no way when Andrew
I
comes
wonder
home and
what
says
our
you want to
viewers-
watch, you're like,
He does,
yes.
though.
You're like, yes, let's watch 2 years ago.
Yes! No, not 2 years. No. We watch immediately.
What do you want to do tonight?
But anyway.
Only thing worse than somebody saying, let's watch our wedding video would be let's watch the French Open from 2 years ago.
No, I still have it, but because I watched it and I
Please
haven't
tell me you
deleted
do
it.
not force your daughter to watch with you. Here it comes. No, she loves watching with us.
No, she doesn't.
I got her
Good.
to watch a movie last night with her daughter.
What movie?
Yes, and we loved it. It's
There's-
such a good movie.
Wait a minute. My market, let's just talk about year. It's from
Oh, yeah.
2010 or before.
Way before 2000.
Yeah, because there's no way. Because Tommy
1990.
hasn't seen a movie.
Right.
He hasn't seen a movie since 2010. Okay, so
Yeah.
it's from the 90s.
You would be right.
Okay, I'm only going to say this.
It's 1993.
16 Candles was before that because you were talking
Yeah,
about
no,
the
no, no,
end.
no.
You were talking about
I've
the
watched
end.
it a million times. No.
Okay, what is it?
It is Searching for Bobby Fischer.
Oh.
What a great movie.
Well, her daughter likes chess. So I
What a
said,
great movie.
Have you ever seen Searching for Bobby Fischer?
Well,
she said no.
How about
My
the Queen's,
daughter
how about
plays
the Queen?
with my husband.
the Queen's
They
Gambit?
play. Oh, I love it. But that's not PG enough for Marina to watch. Yet.
You have
Stop
to
it.
stop being this
No.
restrictive mother.
No.
It's a
Have you
facade.
seen Searching for Bobby Fischer?
Probably when it came out, I did.
Well, it's a great film.
I don't remember the movie, but yeah.
And I obsess after I watch a show that I like or a movie that I like.
Yeah.
So then I go and
Hey, she's
read
into,
all
wait a
about
minute,
it.
She's into.
The kid who's the actor was an actual amazing chess player.
Wait a minute, isn't your daughter? Does she do
He was
martial?
the son of a stockbroker in New York.
Doesn't she do martial arts?
She used to.
Yeah, because there's this thing now where it's like MMA and chess, and they like try to kill each other, and they go play chess, and you can either win by checkmate or win by knocking the person out.
Well,
Yeah.
she loves to play chess
It's a
with
hard
my
game.
husband,
It's a hard game.
and she was so pumped
Watch.
because
Does it
like
go?
I said, she doesn't
What's
want
the-
to watch TV with us anymore.
I don't blame her.
Watch
Okay,
the movie
But this one, I had to force her.
AlphaGo. Watch Alpha. I think it's called AlphaGo. It's about the game Go. You know the Chinese.
Yeah.
And it's like way more It's way more complicated than
Okay,
chess.
I will.
It's great.
Good.
That's PG.
Chess is hard enough.
Did you
Yeah.
ever see AlphaGo?
No.
So they created. It was a company that I think Google bought. I want to say in the UK, and they created a bot that could compete with the best Go players.
Oh, I saw that. I read that news. Yeah.
It's a really good movie, and I'm
I
pretty
didn't know
sure
there
it's
was a movie.
PG.
I don't play any games anymore other than Wordle.
And gin.
Gin.
Gin once a year.
Once or twice a year.
When we get
We're
butchy,
actually-
slappy.
It's actually time for a gin game. I'm ready.
Well, we got you, me, Butchie, Slappy, Tony,
yeah.
and then the question is, will Jules come?
Oh, Jules will come.
Would he?
Jules will
Yeah.
come.
Because you could call Bry.
No, Jules. Jules will come.
Bry Daddy.
For a gin game.
For a free dinner.
For a free dinner and a gin game.
I don't know. I don't know if he'll come down.
No, I just talked to him. He'll come down.
Okay. All right. That's
Yeah.
Do you play gin?
I do not.
You're invited. All right.
Oh, yay. I would love to be a fly on the wall on that.
No, you
one.
wouldn't. No, you wouldn't. You'd kill yourself. In 2 hours into the conversation, you would be like, "What am I doing here?"
I
And
would be like
I'm-
Robert
I'm
Downey
gonna-
Jr.
I'm going to light myself on fire.
Yeah.
Yeah. No, you would not like to be there.
That's a good one. All right.
Well, what'd you have for breakfast?
Protein shake and a banana.
Beautiful. You? Here he goes.
Day-old,
Old taco.
three-day-old guac. Go ahead.
I don't
Some-
know.
Wait, whoa. What'd you have for dinner last night? And then we'll know something about breakfast. What was dinner?
Right.
Dinner last night,
Oh, can't be that good. What was it?
I have to think about it. I don't
Oof.
remember.
What'd you have for dinner? Oh my
I had-
God, what'd
I
you have
had-
for breakfast?
I had
Let's just-
spaghetti and meatballs,
Okay, what'd you have for breakfast?
which gives me heartburn.
Oh, I had crawfish cakes.
Always.
Crawfish cakes?
Yes.
From your freezer?
Yeah, from the freezer.
Oh my God.
Yeah.
Like,
From where? Where do you buy them?
he's not telling. You're
I'm not.
Costco.
No.
No.
Best case scenario, the Trader Joe's. Worst case scenario.
Trader Joe's doesn't have crawfish cakes.
Worst case scenario, he doesn't remember, but he knows the place that he got them was high quality when he bought them, but they've been in the freezer.
Back
At
when
the
we
time.
back
Here we
when
go,
we were
back.
I like crawfish.
back when we were on Lincoln Avenue,
Oh my God.
above Wishbone.
Can we just talk about this is 20 years ago? Go ahead.
No, this is 25 years ago.
Okay, we left 20 years ago.
Right. 25 years ago.
Our old office was above a
Tommy she loves.
Southern Reconstruction cooking is what they used to say, and their absolute best item was their crawfish cakes, and they had a
Wait,
red.
but did they make crab cakes too?
Yeah, crab cakes. No, yeah, but crab cakes. No,
Crab cakes are
the
Johnny.
six. Yeah,
Crab
but she
cakes are
liked one of them. I don't remember.
no,
which
she liked. I'm sure she liked the crawfish. So they had these
That's
crawfish
nice.
cakes.
He just paid her a compliment. That's nice. Normally he'd be like, she doesn't know what she's talking about.
Unbelievable.
Yeah, so it doesn't matter.
Good thing we're recording.
Well, she's been around you a long time, so you've probably destroyed her, like what she likes.
Oh,
but
boy.
they have crawfish
Here it
cakes.
goes.
They had great crawfish cakes.
Yes.
I've been there with you before
Yeah.
for breakfast.
Are they still open downtown?
Yeah.
Wait, Wishbone?
Yeah.
Oh, they are still open?
Yeah, down
Downtown.
on like Jefferson or something.
Yeah, I
I
remember.
was
Only
so
reason
sad
I
when
remember
they
because
closed
the
in
guy
the neighborhood because we
the
used
guy,
to go all the time.
the guy that served us
Oh, he was great.
was Ecuadorian. That's what I remember.
Oh, there
He's-
you go.
he's just
We're
throwing-
everywhere.
Yeah, he's just throwing that out.
Anyway, no.
Yeah,
I
you're
was. That's
making
why I
it up.
remember her going. And they were talking in
Ecuador.
Chinese or
They were
whatever.
talking
In
Ecuadorian.
tongues.
Also,
They were
also known as Spanish.
Ecuadorian.
Also
Yeah.
known as Spanish, but go ahead.
Right.
And so the crawfish cakes, red pepper. They put a red pepper sauce
Yes,
on top.
Good. That was good.
Great. And then they put eggs on. It was unbelievable. They still make it downtown.
I miss that restaurant
Yep, it was
up
great.
here in the north side.
I miss it too.
I really do.
Great pancakes, great
Really
everything.
good food.
Yep.
Nice.
There we
Anyway,
go.
so I had crawfish cakes.
Servers. It was
I
great.
buy crawfish cakes all the time because I like to try to recreate the Wishbone experience, but I'm not as good as they are.
You think?
Have you tried searching for the recipe?
Oh, it's out. It's public. It's out
Is it?
publicly. Yeah.
As in
So-
Wishbone recipe?
Yeah. The chef, the
Oh.
owner chef has done shows on it before. That specific recipe.
It's good.
Ooh, I'm going to look it up.
It's hard to do. Yeah. He's got a couple of videos you can watch him make them. They're great.
So where would you get the fresh crawfish?
That's the whole problem.
He doesn't get fresh. They're frozen and they're old when he buys them. Okay, it's like, oh.
Okay, that's the problem.
I've actually never been to a crawfish boil.
I have,
I never have.
back when I was single. They have it every year in May
Here.
at, oh my God. what's
Never
the name
had
of
it.
This bar. I just blanked.
The Angry Crab or
an
something is very
Irish
good if you want
bar.
all the stuff in a bag.
McGee's, at McGee's,
All right.
Never been there.
There
every
we go.
year.
All right. What do we got today?
Yummy. All right.
I know
have a
what
good
we
show.
do have after this show today at 11:30. We have a live call-in show
That's right.
for 1 hour, and we would love you to give us a call on anything. You want to talk about your turkey for tomorrow? I don't care.
Yes.
You want to talk about trading? I don't care.
I
You want to talk about anything
will.
from today's show? We would love to have you call in. We're testing all our new call-in equipment. So from 11:30 Central Time until 12:30 for 1 hour. We have a call-in show. We will play that call-in show tomorrow night at 6 p.m. on Thursday night Central Time.
312
There you go.
448 7032.
We'll post it.
We will
and then,
post it.
And next week, the show moves to 6 p.m. every evening.
Well, Monday, Tuesday, Wednesday,
Monday,
and
Tuesday,
Thursday.
Wednesday.
And then Thursday is the call-in.
Monday, Tuesday, Wednesday, Thursday.
Yeah.
Yep.
Well, that's not it.
All right.
But it's close enough. All right.
All right, on today's show, we have mailbag because we love your letters and your love letters too. I mean, we love everything. On Unleashed, Scott and Tom discuss stock buybacks. On Bad Dog segment, Tom has a bone to pick with CEOs that pump their stock. On Wow, we are going to be talking about career change and how technology can help you and what to do in general. And then, of course, Market Talk, today's tale of the tape. So let's do this.
Let's do it.
Let's do it. Mailbag, our first mailbag. Love you guys. I need to decide about borrowing against my Bitcoin or my house. What would you do?
I would.
My house?
I mean, at the end of the day, an asset's an asset. So I would say wherever you can get the better rate. So I'd be more rate sensitive than I would be asset class sensitive.
I like that answer.
It is not an easy. Here's the issue. I don't know that the rates are any different if you have a home equity loan or if you're borrowing against your Bitcoin.
I'm going to say home equity loans, if you shop it correctly, because there's more possible lenders than there would be for Bitcoin. So I'm going to say it's more competitive and you're going to probably have a lower rate. But I've never looked, but I'm going to say there's probably a lower rate.
Borrowing against Bitcoin gets as low as 6.5%, but it could be as high as 12%.
Correct.
Borrowing against your house, I'm going to guess it's like around margin rates, 6, 7, 8%.
Yeah.
In that range. So I'm not sure that that's a big difference.
6, 7. Have you
mean-
heard of that? We just said 6-7.
What would I do in this case? Honestly, if you had to borrow money, like depends what you're borrowing it for, I guess, because that might make a difference to me. But I think your house probably has a lot less volatility.
A lot less volatility.
A lot less volatility. I would depend on interest rates, but your house has a lot less volatility. So I'd probably just do house for volatility reasons, nothing else.
Okay.
All right, good. Does stock market volatility play a significant role in business or job opportunities?
It depends on how volatile, what we're talking about volatility. If market in, day-to-day volatility means nothing, but when you start to see the market being volatile like we have been, going back to April when talking about the tariffs, et cetera, that put fear into a lot of businesses to say maybe we need to cut back on hiring. The market did have a big, pullback and then an explosion. We went up to new highs. But you still, I think, have the lingering impact of businesses, a lot of companies saying just a lot of uncertainty, we're not sure. So today, I would say yes. I would say, but this is unusual because there is the added impact of the tariffs. Overall, I would say probably not that big of a deal.
My experience in researching this topic, because we built, so on the new Lossdog software, we built a live data feed for jobs. And it was, I think it's the first of its kind. And we actually have about something like 50 inputs to determine what jobs should pay. I mean, over time, it's tied mostly to inflation more than anything else, but there's definitely a stock market volatility built into job pricing. I would say two things. First of all, volatility does play a role if a company's stock has dropped significantly, it will play a role in their hiring practices. And I think if the stock market has dropped significantly, or if interest rates have gone significantly higher, both of those will play a role in the way companies, think about their hiring. On a minute-to-minute or day-to-day basis, I think it's probably very minimal, but volatility definitely plays a role. I'm not sure it's a significant role on a day-to-day basis, but it definitely plays a role in business opportunity and job opportunity.
But also, in fairness, volatility is going to explode on a big down move, right?
Yeah,
So,
but I don't care. Volatility plays a big role in the economy, and therefore it plays a big role in business or job opportunities.
Okay.
How important is staying at one job versus trying to move around every year or so to get as much experience as possible?
It's a good question, because I have a strong opinion on this.
Yeah,
Go
you
ahead.
do.
All right, so I'm going to say this is going to be more of an art than a science. And the reason I'm saying it's more than an art than a science is that it comes down to what your job is, what your role is. Personally, I thought it was a giant red flag if I saw somebody moving around every year. If you're moving within a particular company and you say you move from here to here to here, year to year to year, that's very different than moving from company A to B to C. So within a company, if you're moving, you're hopefully getting promoted, which means you're doing an amazing job, and hopefully that's going to give you the opportunity to have different experiences. I am not a fan of looking at somebody and they stayed at one job for 6 months and one for 9 and one for 12, because I think it takes 6+ months to even really figure out what your job is.
I mean, I think this is really important. It's a great question because it's almost a non-starter for me. I mean, yeah, it's a red flag, like Scott said, but it's really a non-starter. The single most expensive thing about building a business is when you train somebody and then you lose that person, and then you have to go through the entire training process again. And the current Gen Z millennial generation,
Oh boy.
they are much more likely to want to jump around. And I don't have an issue with it other than, for me, it's a red flag.
Yes.
For me, it is.
It's talking about the expense. It's much more expensive to hire the wrong person than to not hire somebody. But again, I don't think anybody can fully get into a role in less than 3 to 6 months. It just takes that much time to really figure it out. So how are you leaving after 6 months? What could you have possibly learned that you feel like I've done?
What we're saying is you can't get
like
enough
I've
experience in 1 year.
exhausted everything that I could in this role. I'm bored. I'm moving on to something else. Listen, if it happened
A year is not enough.
and again, and if it happened once, it's fine, but it probably means you didn't pick the right role, or you accepted the wrong opportunity. But if it's happening multiple times, that's a bad pattern.
Right.
We have a 10-year rule. I have a 10-year rule. 10 years is long enough at one spot. I mean, at Thinkorswim it was 10 years. At Tasty it was 15 years. But generally speaking, 10 years.
But as an entrepreneur.
As an entrepreneur, 10 years. But I do think it's super important when we're hiring people that they have not jumped around a lot. Like I want somebody that killed it at their job, but then, you know what? It's time for a change. I completely understand that.
Okay.
All right. I really would like your advice about raising money for a new startup. I am post-MBA, but with minimal capital and work experience.
I mean,
it's a tough one.
So raising money, yeah.
Yeah. So we're going to spend a lot of time on, raising capital and deciding to go off on your own and do things like that. First of all, this person says, I'm post-MBA, but with minimal capital and work experience. That means that, you're still really early in your career.
Right.
And you probably have a lot more networking work. You have a lot more networking to do. You have a lot more experience to gain. It is very difficult to raise capital without some experience. And it's very difficult to raise capital without a network that you can go to. I mean, of course you can lean on friends and family, maybe, but that's really tough, and that's usually a minimal amount of money. The first time that I ever raised capital was the late 80s, and we raised $10 million to trade with for a fund. We raised $10 million for a fund, which at the time was a huge amount of money.
Huge.
And it was the first time we'd ever raised money. I was like, that's a lot of money.
Yeah.
And I'm going to say I wasn't surprised, but I was kind of looking back at it now. I'm very surprised that the first time we ever raised money, we raised $10 million. And we managed a fund for...
Not for a business, we were managing the money.
Yeah, we were managing the money.
Yeah.
And it was a high frequency fund before there was high frequency. I know that sounds crazy, but it was a program trading fund, it was program trading before there was high frequency trading. And we were building basket technology and all this stuff. Anyway, my point is, so that was, say, 8 years after I started, 7, 8 years of experience, minimal. And a lot of success in those 7 or 8 years in the 80s. And it was after the crash and all that kind of stuff. But that was, I guess I never could have done that had I not created a network at that point.
And it's also, you don't know how to do it. That's the question. How do I do it? Because you don't know what you don't know. So, this gets back to the comment about, we were talking about MBA. Is it a good idea to go work for a little bit first before you go back to school?
Right.
And these all build off of each other, and you can hopefully see the pattern here.
Yeah.
Talking about networking and experience and how critical they are.
Can I say one more thing about this that's important to me? I don't think people realize this either. If you don't ask, you have to learn to ask. Like the whole sales process, I think this is what always has made it easy for Scott and myself to raise money, is we don't mind asking. And I know that sounds...
No, I tell my daughter all the time, you need to ask. Okay, so you already have the no, but what if you get a yes?
Right.
You have to ask.
A really, really good promoters, salespeople, you have to have an ask. And I think for a lot of people, that ask is really uncomfortable. For us, we were confident enough that it was never like super uncomfortable, but you have to ask.
But you have to be comfortable with a lot of rejection. because there's going to be a
I
lot
mean,
of.
look at me. How much I mean, how much? I get a lot of rejection.
How many no's does it take?
Look,
how,
she rolled
Tiny
her eyes.
violin.
She rolled her eyes.
how many
tiny
no's? How many
violin.
no's does it take to get to a yes? So,
That's true, though. I mean, you have to get.
and you need to know what your ask is. So the hard part is, how do you really know what your ask is if you have no experience, if you have nothing?
You
to
got to
base
be
it on?
very comfortable getting shot down.
Yeah.
I was
Yeah.
pretty good at that.
Yeah. Yeah.
Yeah. All right, let's go. That's good.
Goldfish, right?
Goldfish.
Here's a question that has always haunted me. I work for a large Fortune 500 company. Should I take risk at work or play it safe? What's my upside to taking risk?
I'll go. To me, there's absolutely no, there's no risk to doing it, and it really. I'm glad you didn't put the company in here, but it will come down to what the management style is in this company. There are some companies that I have friends that work at that they're great at promoting. Managers are great at promoting people below them, and there are a lot of other companies, I think it's more common than not, where the manager wants to take credit and they want to take all the responsibility for what their team does. And I personally can't stand people that do that.
Yep.
So it's going to be, for me, I would say, what you'd ask yourself, what situation am I in? Is my manager going to give me the credit for doing whatever it is that I'm taking the risk to do? Or is my manager, going to say, no, that was all me, and hope that they get promoted or something? So it depends on the situation. I would say take the risk. If you're not getting what you think you should be getting, then it's probably time to look elsewhere.
The challenge for me here is that the only time I've ever worked for anybody else was when we were bought out. So that is really kind of a unique situation. If you're a founder and you get bought out and you're under contract to stay, they really have no leverage over you. Like, all they can do is fire you, and they don't really want to because that just looks bad, and that also doesn't really go well. So you're kind of in this unique position of you're pretty much untouchable in that situation. So we would obviously take as much risk as we could because we didn't care, because they couldn't do anything to us.
No, but it was also, that was our mentality. It's not that we didn't care. We weren't.
We weren't taking not care.
Right. We weren't taking risks that we wouldn't have taken when we owned the business. So
that is true. But
Okay.
After we were bought out, I would do things like build an exchange or build some. I would have no problem spending tens of millions of dollars of other people's money doing stuff because I thought there was a lot of upside to it.
But again,
and
we
if
would have done it without having.
If we were on our own, I would have done the exact same thing.
Correct, and that's critical.
And we get to that. Like, I don't think anybody else at a bigger company would have taken any of those shots. And I think the company itself is like, what the hell is he doing? But we'll take our shot and see. I think for most people, when you work for a big company, there is not a very even risk reward. It's not like risk one to make one. It's not like that at all. You're usually risking one to make much less than one. Because if you're right, at the end they'll say, oh, that's great. Yeah, very few people get the reward they deserve for taking the risk when you work for a big company, especially because they're so vertical. Everybody's got to get a piece of the reward.
Yeah.
So here's what I think. You're going to get better if you push the envelope, and for the rest of your life, you're going to be a better risk taker, and you're going to ultimately have more upside. It might not be with that job.
Correct.
But you're ultimately going to have more upside.
And likely it won't be with that job.
Likely it won't be there.
But it could open up other opportunities for you.
Yep.
Good one. All right, so we're moving on to love letters from the chat room. These are interesting ones.
From the chat room. I like it.
I know you and Scott are always talking about food. Do you guys ever talk about the markets and trading?
All the time.
Always. All the time, nonstop, until they go to sleep.
No, that's not true.
Come on.
We bitch a lot.
About the market.
Yeah, about the markets.
So that means you're talking about the market.
Yes.
But we don't sit there and talk about like I think people, when you think talking about markets, like you think we're standing over a water cooler and going, oh,
I made this trade, or what do you have on? We're not.
I mean, more of it's like, can't believe I just sold these here and they're 10 handles higher. Like, if that's talking about markets, then we do that all day long.
All day long.
And you're stuck in the middle.
I am stuck in the middle.
For 20 years, 30 years.
Yes. All day long, my friends, but it's a good thing. Love that you guys are always trying something new. Good luck. Thank you.
I mean, we are always trying something new. It gets back to that thing before, 10 years, 15 years of something, it's time to try something new.
Yep. Awesome. Thanks for the good wishes. Oh, poor soul. She needs to rethink her life choices.
I like this one.
Truer words have not been spoken today.
No, that's okay. I'm okay. I don't know. There's something.
Do you remember years ago on the Thinkorswim trade desk when we first started, we had this woman that worked for us, Molly. Do you remember Molly?
Yeah, of course.
Anyway, she said, remember we wrote something on we had this like funny website that we used to write things, and what we said is, we made up quotes from her, like, please don't marry into the losers on our trade desk. And it was actually pretty good. So every day we'd make up something that she would say, and she'd be like, I never said that. We'd be like, we made it up.
There you go.
The woman behind the counter at Dinkles, all that kind of stuff. But you need to rethink your life choices.
Oh my God, the woman behind the
No,
counter.
I'm good.
The woman behind the counter at Dinkles, I would buy donuts every Friday. Every
Right.
Friday, I would walk in and buy donuts. And every Friday, I'd give her the same credit card, and because it was a company credit card, and every Friday she would look at me and say, I need to see your driver's license.
Hey, she was just being safe, I guess, or following her own routine.
Aye.
I don't know, who knows, right? It's like those people, it kind of annoys me when those people that you meet a bunch of times and they every time go,
Nice to meet you.
Nice to meet you.
It's the worst.
You've seen them a million times.
Drives me
It drives me
crazy.
bananas.
And
It doesn't bother me at all.
And actually, there's
just
somebody,
don't do that.
I'm not naming names clearly, but there's somebody easily I've met 15 times. Easily. And every time I meet him, nice
I'm
to
gonna
meet you.
say the same thing,
And he's
and-
good friends with a good friend of mine. And I said, next time he says that, I'm going to say to him, look, it's clearly not that nice to meet me because this is like the 16th time. And
Right?
You don't remember.
Nice
I usually
to meet
remember
you.
people,
Really?
but I don't always remember names.
Yeah, well, there's a big difference. You could say,
Yes.
listen, nice
And
to
you can say, nice to see you again.
Nice to see you again.
You don't even have to say again. Nice to see you.
Nice to see you.
But you recognize the face.
Yeah, sure.
Come on.
No,
Nice to meet you.
Actually, it's Tom.
Please,
that
for the
does.
15th time.
Right.
Oh.
Anyhow, I digress. Is there Lossdog merch? It's coming.
Coming.
It's coming. We really
have
like
amazing
we really
merch
like our
coming.
logo. And
Yes.
so there's some fun merch coming. We're working on the merch site. We haven't launched our regular site yet, so the merch site will be after that.
It's coming.
It
It's
is
coming.
Might be before. We'll see. Oh, and this one says, you're weird.
Thank you.
But yeah, but we know we are.
I
It's not the first time I've been called weird.
mean, you're weird. I'm normal.
Oh, you are so normal. Oh, my
God.
goodness.
It's
The epitome of normal.
no, I can't. There's too many things going through my head right now.
We're just gonna move on. Our next segment, Unleashed, we're gonna discuss, or they're gonna discuss, our Buybacks, the company's report card.
Interesting thing about buybacks, just to talk about it for
Yeah.
just a second. I have very mixed feelings up front
As do I.
about buybacks because we have been a public company twice. Thinkorswim was a public company, and then when Tasty was bought out by IG is a public company trading in London. Both, we never did a corporate buyback when we were Thinkorswim. Our symbol was SWIM, but when we got bought out by TD Ameritrade, they did a buyout. I'm sorry, they did stock buybacks, and IG has done stock buybacks. They're in the process of doing one right now. So I've been on both sides of kind of the fence as a trader, when they announced stock buybacks, and also as somebody who owned multiple public companies, I've been involved in stock buybacks. So I'm mixed on this topic. The bottom line is when you're successful and you're making money, what do you do with the money? That's the whole thing of the buyback. There's a lot of companies out there that have cut their expenses, and in a strong economy, they have done quite well, and they're sitting on hordes of cash. What do you do with the money?
And we will get into that. But again,
That's right.
just to make sure everybody understands what a buyback is, a company publicly traded company goes out into the open market and literally spends excess cash that they have, and they say, we think at this time the best use of our excess cash is to buy back our shares.
So the question I have for you is, what would be your first choice of the best use of company cash? Because there's only three things you can do. You can buy your stock back,
Yeah.
you can buy another company, okay, or you can pay a dividend.
Or you could, it doesn't have to be buy another company, you could invest
What about
in
invest in
research development, et cetera,
technology,
et cetera.
right,
You
all
could
right,
invest in your own company. There's at least four.
There's
Right.
four. You can invest in your own company.
Correct. So, so you say I can't categorically say that I think 1, 2, 3, or 4 is the best. As a risk taker, my preference, but again, it would depend on the situation. It's very specific to the opportunities available. My preference would be to go out and spend the capital and try to grow the business, to continue to grow. I hate the dividend play. That to me, you're just.
I agree.
You're again
You hate the dividend play because if you own the company or you work there, you want them to spend the money
to build a better business.
to build a better business.
Correct.
If you are an investor, you think about this very differently.
You asked me
You
though.
want the stock price to go higher.
I'm talking about as a shareholder, as an operator of the business. So our companies that have been bought out, and we're still shareholders, I would rather not see a dividend get paid. I would rather see that money being deployed.
What about if you're an investor?
Well, I mean, it depends again. What are you investing for? So if you're investing in the company as a dividend-paying stock, then obviously you want to continue to receive your dividend. But dividend-paying stocks typically are this as opposed to a growth stock, which you're doing that. I would prefer to take the risk and say, I want the growth aspect. So I'd rather see the stock try to do this and take the risk of good leadership, making good investments, whether the investment is doing something in research and development for the existing business or going out and buying another company that you think will be synergistic to your business. And you say, look, it's either in the same business and we think that we can create efficiencies with it, or it's another line of business that we're really interested in, and it's easier, less expensive for us to go buy an existing business than it is to go build it ourselves.
Yeah, and the reason people do one more thing. The reason reason companies do buybacks is because a lot of times they think that their stock, even if it's expensive, they think their stock is a better buy than going out and reaching for another company.
And that might be the case.
Yeah.
And you might have a situation where you're looking at your stock price and saying, look, our stock price has a move relative to
Like if it's undervalued.
That's right. And you say, we think that relative to the street, we're undervalued, therefore it's a better investment. So,
Or relative to the richness of somebody else that you want to buy.
correct.
Usually when you want to buy somebody, unless it's a strategic play, you're overpaying.
Well, it's rare that you're buying something in a fire sale that you're saying this is an amazing.
Nobody ever buys. Fire sales never work out. That's another topic we can have for a different day.
Yeah.
But the reason, and this always drives me crazy, the reason that certain companies, you reach for them and they have a big premium is because they're worth it. And the reason other companies...
Yeah, but there's a company in particular that I'm thinking about that I would say was a fire sale. Not that they were trying to sell the company. We wanted to buy it. We were shot down by the board, and it would have been an amazing purchase.
But it's rare. It's rare that fire sales work out. Most of the time, the companies have to reach for a little bit. Like every time somebody's bought us, they've always said, we overpaid.
We
overpaid for you guys. You're not worth what we paid for it. I'm like, I always say the exact same thing. Good companies cost money.
Yeah.
Good companies cost money.
You're paying for quality. All right, here's more pros.
So this is the pros of stock buybacks.
Yes. Well, we had some pros on the previous one too.
Yeah.
And
Agreed.
Then, doing a buyback signals financial health. What do you think about that?
Financial help because you have
the extra cash flow.
Correct. You're in a strong position. The company is sitting on a pile of cash just trying to decide what to do with it. The question is the buyback of their own stock the
There
best,
have been
the best
situations like, IBM has been buying their own stock back for 2 decades. I mean, it hasn't just until 2025. The last 2 decades, they bought, the stock was worth like, whatever, $170 billion, and they bought back $150 billion worth of stock. So it was a horrible buy. So it doesn't necessarily signal financial strength. It just means
It can.
Well, it means financial strength in the company that they have the excess cash. I mean, if you said if the company has no cash, you would say that company.
I'm just saying there's examples of companies buying their own stock.
It doesn't necessarily
Where it
have to
doesn't
work
move
out.
the stock.
Yeah, and it doesn't have to work out. But the choice. It's like buying another business. Doesn't mean it's going to be accretive. It doesn't mean.
It doesn't mean it's always a good buy. Is I
Yeah.
guess the point. Sure. And
Some
it
more
increases-
pros.
So do you see it as beneficial for pensions, 401ks, and long-term savers
I
when the
don't
company
see it-
buys back?
I don't see buybacks as necessarily a bad thing. For me personally, I've never loved the concept of buybacks because I'd rather buy other stuff if I had to, or return.
But we're risk takers.
But we're risk takers.
Right.
So
Like buying your own stock back is
it's a safe play.
It's the safest
It's
play.
a
you
safe
have.
play, for sure.
Because your board already approved it.
And,
There's
it,
something you
re-
have to
and
Right.
it reads well to the street because you're saying, look, we have so much confidence in our company right now. We
Right.
want to go buy it at the current price. So
Right.
it reads well.
Yeah, it sounds good on paper.
Right.
Doesn't mean that it necessarily works out.
Yeah.
Okay,
Some
here's
negatives.
Cons.
Right?
Reduces long-term investment.
Sure.
Buybacks may divert funds from R&D, which we had talked about,
Yep.
hiring and wage growth.
Yep.
Yep.
May boost short-term stock prices at the expense of future innovation.
That's right.
Again, it's a given.
I mean, I think that there are certain companies that I've been involved with that are very innovative. And they almost always get bought out because big companies can't innovate. In fact, both of the
No,
companies.
it's not that they can't. Typically,
It's cheaper.
Typically, they don't innovate
No.
the way that small
No.
companies do.
No.
They-
It's cheaper
they
to
literally
buy the.
can't.
Is it cheaper to buy the small company
It's not
with the
cheaper.
innovation?
They-
Big companies can innovate.
Okay, I will say this again
Sure
because
they
I
can.
disagree with Scott.
Okay.
Big companies, a lot of big companies cannot innovate.
A lot of big companies, fine,
they
but not just
simply
categorically.
Right, he's black
Okay,
and
not
white.
categorically, but
Okay.
most big companies, it's very difficult to innovate. A, because it's way too expensive for them, because they'll spend tens of billions of dollars as opposed to a company might spend tens of millions of dollars to do the exact same thing. And they can't acquire a certain type of talent. They can't acquire that creative, innovative talent. So it is way less expensive to pay up to buy innovation, strategic innovation, which is why small innovative companies get bought up at premiums by big companies.
That's what I mean. It's
because
cheaper
it is-
for the big company. It's
less
like buying
expensive.
the ingredients versus buying the cake already made.
But the problem is,
The $13 apple pie at Costco. You
There you go.
couldn't buy the ingredients to make that.
No,
for
you couldn't.
$13. You just couldn't.
It's ginormous.
Or $15, whatever. it is.
Yeah.
I got one.
How much is it? $15? $14.99? $12.99?
I don't remember.
But it's like you need two hands to carry it.
It's actually pretty good.
It's great. It's a great pie. You couldn't come close to producing that pie
No.
for that money.
No.
So you go to Costco,
Agree.
right?
Sure.
All right. We also have as in negatives increases wealth inequality.
I agree with that.
Because it's
Benefits flow mainly to shareholders who are disproportionately wealthier.
Yeah.
Workers may see fewer benefits or wage improvements.
Well, sure, you're taking money out of it.
Right.
Yeah.
It's money that can't be spent doing something else.
Potentially manipulative.
Potentially, but I don't think.
Can artificially inflate stock prices and executive compensation.
I think the executive compensation piece is more important.
Yep.
I think that, you got to realize the life expectancy, in their role of a CEO is little less than 7 years.
Right.
So do they really care
For an S&P.
for an S&P company? So what you're hoping for is, here, think of it like a football coach, or a hockey coach, whatever you want to, any sports team. You're basically hired to be fired. You're hired to be fired. There's only a few coaches that last more.
You're
than a few
hired to be fired,
fired.
meaning that unless you're winning championships, you're gone. You know that.
If you haven't won a championship in 7 years,
You're done.
You're done.
Less than
And-
7.
I'm going to say way less than
Okay.
7 years.
Well, so by the 7th year, they got to get rid of you no matter what, even if you're a great coach.
In soccer, it can be a couple games. They're gone. Gone.
well,
In the English league, at least.
in sports, you have a certain period of time. Even if you're a fantastic coach, they still have to get rid of you because you just haven't got it done. It's the same thing with CEOs. And so if you artificially inflate stock price, it looks good for you. That's how your compensation is based. That's it. And you may prioritize financial engineering over productive economic activity, and I agree with that. It is sometimes the decisions you make could be focused on top-line revenue rather than long-term revenue.
When we went, Tom and I went to a board meeting at TD when they bought Thinkorswim, and I was sitting next to Ed Clark, who was at the time the CEO for TD Bank, an impressive guy, and he made a comment exactly to this point. He made a comment that all of his direct reports could retire today. And I looked at him and I said, I'm assuming you're saying that because they're going to make decisions for the right reason, being the long-term growth and health of the business, as opposed to the wrong reason, which is short-term, how do I do something that makes me look good, that means I can get a bigger bonus? He said 1,000%. So that's a rare position to be in, where you could surround yourself with people like that. But I thought it was just a great story.
You know, it's funny you mentioned Ed Clark. He's one of my favorite CEOs.
I think it was a really interesting guy.
Really interesting guy. It was a Canadian company, TD Bank.
Huge bank.
Huge Canadian bank, like third or fourth largest Canadian bank, one of the largest banks in the world. But at the time Ed Clark was the CEO, he was a fascinating guy.
Yep.
Really smart, really interesting. I liked him too.
Yep.
All right. Good. That's good.
That's good, yeah. And we're good timing. Somewhat.
What?
We're chatty too, but anyway, that's okay. We're moving on to bad dog.
So every day.
Go ahead.
So every day we write a rant for every day. It's not easy either. And
No, it's not.
and this week we've covered 50-year mortgages. What did we do on the first day this week? We did billionaires. So we covered ultra-rich billionaires first day, asking them to step up. Yesterday we covered 50-year mortgages. We just think everybody should have the most choices. And today, and love them or hate them, it's just, we take a little risk. Today we want to talk about CEOs kind of pumping their stock up, like when they talk on earnings, and just to, there's been a couple of cases recently, especially with NVIDIA and AMD, where I think this came to light. I just think it's interesting. So here you go. Here goes. If Jensen Huang truly believes AI isn't a bubble, and that's what he said on the earnings call, why has he been dumping $13 million worth of NVIDIA stock every single day? Hi, I'm Tom Sosnoff, and I have a bone to pick with AI company CEOs who were talking their books without talking about the risks of investing at these lofty levels. On the last NVIDIA investor call, Jensen said everything looks great. On the last AMD investor call, Lisa Su at AMD claimed AI demand is insatiable and predicted a 35% annual sales growth. Look, I'm not suggesting these are carnival barkers selling snake oil, but here's what we know for sure. Neither of these two CEOs were buyers at these levels. Both were sellers. Let's go next slide. So Jensen has sold $1 billion worth of NVIDIA since this summer, $13 million every day. Lisa Su just offloaded $37 million of AMD shares. When Warren Buffett suspends share buybacks because Berkshire is overvalued, or when Elon Musk tweets that Tesla stock is too high, or when Jamie Dimon hints that JP Morgan might be richly valued, or when Bezos suggested that Amazon stock got ahead of itself during the dot-com bubble, or when Reed Hastings at Netflix acknowledged that the stock is pricing in very optimistic growth scenarios, they're telling the truth, despite the consequences of the stock price. The average CEO has tens of millions in stock options. Their entire net worth is tied to keeping that number going up. Consequences be damned. It's like asking a golden retriever to guard a ribeye. The system is designed for failure. So when someone like Buffett or Diamond actually admits their stock might be richly valued, they're demonstrating integrity. But when AI executives are pumping valuations while their SEC filings show them heading for the exits, they're not lying technically. They're just conveniently forgetting to mention that insatiable demand and insane valuations are two very different things. We've built a system where honesty is punished and strategic silence is rewarded. When your CEO is selling millions while telling you to buy, we're not running a market economy. We're running a casino where the dealers are cashing out of their chips. We can handle the truth. And I think it should be noted on this little rant that when NVIDIA had their last earnings report, the stock opened at around, when he said this, when Jensen Huang said this,
It was up
the
by
stock
10,
opened,
11 hours.
yeah, the stock opened about 196-ish. That was the day the market had this huge turnaround.
Yeah.
But when he said this, which essentially was, we're not in a bubble and the future looks bright, gotta wear shades type thing. The stock dropped from,
It has an uptick.
it hasn't had an uptick since he said that. It was 196, it got
under 170.
under 170. And this is like in the last 2 weeks. When Lisa Su said what she said, that there's insatiable demand and we're going to grow by 35% a year, the stock traded 260. This is just 2 weeks ago. Since she said that, the stock dropped to under 200. So it's lost 20, 25, over 20%, 25% almost. It's kind of, well, let's just say, it's a convenient discussion. It's timely. I'm not picking on any of these companies. I'm not sitting here saying Musk is great or Jamie Dimon's great or any of that kind of stuff. But just, you know what? Sometimes you just got to back off a little bit.
Agree.
And you're getting a little of this. I'm telling you, you should do this. Buy.
When you're doing
and over here, I'm going
Right.
sell. And I mean, in fairness, I don't know about Sue, but for sure for Jensen, these are planned sales.
Oh, yeah, yeah.
So
And they're small.
And so he's going out, and there's somebody that's managing this for him, and regardless of what
I
the
don't
stock
care
is.
about their sales. The sales are the most irrelevant part.
It's just the point that I love my company so much, you should buy the stock here, and by the way, I'm selling it. And then the answer is always, well, I'm just taking some diversification. That's all I'm doing. I'm just diversifying a little
No,
bit.
I have no doubt that Lisa Su believes everything she said and that she's so bullish on her company she can't see straight. I have no doubt that Jensen Huang is so bullish on NVIDIA, even though it's a $5.5 trillion company.
Not anymore.
Well,
It's
five.
four and a half.
Well, I have no doubt that he believes he's totally bullish on the company. All I'm saying is you got to be careful when you say certain things to retail investors that are not necessarily used to, trading stocks at the same way. And it can cause a lot of damage, a lot of harm.
Yep. Agreed.
All right.
All right, next up, we have our words of wisdom with these two. We're going to be talking about career change and mapping your transferable skills. So I know there's a lot of people out there who have sent us emails and stuff like, I'm trying to do a career pivot. Can you give us some guidance?
Well,
So we'll talk about transferable skills.
Yeah, but before we start this, on the software that we're building on the new Lossdog software, one of the coolest features of the software is that when you upload your resume or your profile, if you do it manually, whatever it is, you can run it to see, what statistically we show your evaluation is in whatever job it is that you have or whatever you want to do. But you can also take that same information and run it for any other job.
Right.
Like you
Well,
might
it's
not,
7. We're showing
Well, not
7
any other
CAD,
job.
not any other job. We're showing 7 industries, which we'll show a slide.
We're
with.
going to be talking about it, yes.
What I'm saying is you can say, hey, you know what? I don't even know how to program, but I want to see how much money I would make if I was a programmer. And you can do it in any city.
You would not be a good.
Well, no, we're talking about experience,
No, I understand that. I'm just saying one of the
not
cool
just
things,
your whims.
one of the cool things about what we're building is that you can look at essentially transferable skills in different places, because a job in Chicago
And-
might pay $200,000 and a job in New York City, that same job in New York City might pay $230,000, and in San Francisco it might pay $250,000.
Or your skill set in your current role might fit perfectly or fit really well in another industry. So,
Right.
And that's what we're going to show you. And this, the first part, the first slide here is to talk about self-assessment. And it's critical that you're able to do an honest evaluation. And
like a compilation of everything you have done, all the skills and experience that you have, like in your entire career.
Yep.
Well,
Because the more information Lossdog gets, the better results it will give you, right?
so one of the things about Lossdog that's different than just 80% of the people that write a resume have something on that resume that's not necessarily true.
Sure.
And 80%. Now, some of it's minor little crap, some of it's obviously big stuff. But it doesn't give you a really fair, when you're not telling the truth about something, you don't really get a fair assessment. One of the cool things about Lossdog is we don't care.
Right.
Like if you lie about something, then it doesn't, you're just hurting yourself. Because
Right.
we're not taking that and showing it to anybody.
Right.
So you can actually get a real self-assessment because you're going to put in all accurate information. Because why would you do anything but that?
correct.
So, if you have target roles, you can try and match those skills to those target roles. I think using the software, you will be able to.
It's helpful in that regard. I mean, what it uses is it uses this proprietary AI function to help to match target roles. But the reality of that, to be fair, is there's two things about people just starting out or whatever it is. One is, yes, there's going to be, for everybody has an ideal situation. Like your daughter's a perfect example right now. She knows what she went to school for. She knows what an ideal situation would be. If she could have her dream job, it would be X, right?
Right.
But
That's not available.
it's not available. So
And maybe the
so-
skills or experience don't necessarily match that role.
Or
But-
it's just not
but
available.
that's
or
where-
forget about that. Just say it's just
Not
not
available.
available. So then matching your skill set to a target role is, it's very difficult.
And it's the next best thing.
Right. So what you want
Right.
what you ultimately want to do, you have to take whatever you can get, and then eventually, you wait for that opportunity. I mean, over the years, we've had so many people that have come to us from other jobs and said, I can't believe this is my dream job. But they've been working for 10 or 20 years. I finally got my dream job.
Yeah.
And yeah.
Well, to get to your dream job, you also have to commit to continuous learning. Like we talked about yesterday.
This is
Growth mindset.
We're not going to stop pounding.
Don't ever stop learning.
Correct.
Don't ever stop challenging.
Don't ever think that you know
Stretching.
everything already. That
Stretching.
there's nothing you can't or you can learn. Like everything. You just
Well, it's okay
continue
to
learning.
think that you know everything, but you
No.
still have to.
Oh, that's
keep
you,
learning.
because that's you. But anyway. And then, again, experiment on a small scale first. Because if you're completely pivoting, you don't want to just sell your house and pivot into something you're not even sure is going to work out.
For the last 15 years, we've been saying when genius fails, it's based on size. So you have to stay small.
Yeah, start small.
Yeah. Everything
Great book.
everything is done small. There's no advantage to
Starting big.
to be big or good.
There's only downside.
Yeah.
And then leverage the tools and framework, which obviously one of the tools will be Lossdog.
Yeah, I mean this is a master of the obvious here, leverage
Right.
tools and frameworks. I mean
Right.
there's nothing, who wouldn't,
Well, but it's not that you wouldn't. You might not know where to go or how to do it.
Well,
Right.
there's never
or,
been a
or
tool.
people may not even think that
There's
they
something
need
out.
some kind of technology
Or that it exists.
to help them figure out
Correct.
where to go or how to do it.
No. There's never been a tool like what we're building for individuals.
Right.
There are sites out there like LinkedIn and other places like that, can help you networking. But there's very few
yeah.
direct tools
Right.
to help you just give you context about what you're worth.
Right.
But there's definitely networking tools out there. There's social media is one massive network,
Sure, networking, sure.
Yeah. Well, that's kind of important.
Yes, it is important.
And here you go.
And here you go.
I can't read them. 7 industries.
7 industries related to your experience.
Oof.
So you put in the Lossdog app or software, all of your information in there, as much as you possibly can of your experience and everything. It's gonna tell you the 7 industries that are related to you, personalized to you. This is I've never seen this anywhere.
Well,
It's one of the coolest features in my opinion.
We focus a lot on this software on finance and technology because it's kind of like, you know, where when you look at the kind of the job world right now, you know, our strengths are finance and technology, so that's where we kind of focus. You know, our strengths not manufacturing, for example. I mean, there's other professional services, but they're harder to judge.
Right.
You know, so that's all.
This is cool.
Yeah,
Very cool.
I just can't read the 7 industries from here.
Okay.
All right. Well,
On to
they are finance, education, healthcare, government, retail and consumer, tech, and business services.
Yeah.
there you go.
So for this particular person, which is an example,
Tech was way better than retail.
tech is way better than retail and consumer.
All right.
All right.
But
Let's do it.
all right, well, moving on. Right on time. We're gonna do Tom's and Scott's take on today's financial markets.
It is a holiday-ish day. We are, you know, basically,
Come on, say it.
well, by this afternoon, it would be considered a holiday. Yeah, we got to bring up the screen here.
There we go. All right, perfect. SPOO's up 62, NASDAQ up 270.
Not what I wanted.
Not what I wanted, neither. Gold up 23. I'm going to get yelled at for this one. Silver up 177.
You took me down.
I did. Bitcoin just under 88,000, up 500. Ethereum 2950, up 23. 10 years up a little bit, a little over 4. Bonds up 2 ticks. They were down a little. They were down earlier this morning, weren't they?
They were down 9.
Yeah. Apple is up 230. AMD, talking about AMD, up 7. Amazon up $1.78. Google down 430. Microsoft up 10. Nvidia is up 288. It was down this morning. So obviously, market having a holiday cheer.
Well, the market, S&Ps yesterday were up 60. And I thought, okay. And the NASDAQ was down all day, and then at the end of the day, it rallied and closed up 150. I thought today was a pretty good day to get short NASDAQ.
Not yet.
Well, I already did. And so,
It's not yet a good day.
not yet. So, yeah, this is not going to be a good Tom day right here. S&P's up 63. You know, never sell a dull market. I got that. And also, you know, I usually don't get short prior to like kind of this
Holiday.
Yeah, because the day before Thanksgiving, day after, it's always kind of bullish, whatever. But I figured I don't have too many deltas. Deltas are just equivalent shares of stock to the, you know, directionally. And so I don't have that many deltas on, but I'm definitely short S&Ps. They're back up to 68, almost 68 and a half. And just to put some context on it, I think the all-time high is less than 1% away. We're basically 1%
From all-time highs.
from all-time highs. I don't remember the all-time high of the NASDAQ. I want to say it was over 26,000,
I think so.
but I'm not 100% sure, but still up 250 today. They've made back everything they were down. You know, and like you said, precious metals are up, basically, across the board, everything's higher today.
A lot of green.
A lot of green. And we were nibbling on the short side all morning. Only thing Scott got me into today, which I shouldn't have listened, I kind of thought it was too early, was silver, a little on the short side.
Okay. You sold it over 53. It's not that bad.
No, it's not that bad, but I got other problems.
Right.
Before the show started today, I was like, you know what? I'm going to sell some NASDAQ futures, and then probably after the show I can buy these things back for a nice little profit.
Probably would be the key there.
Probably the key would be next Tuesday, if I'm lucky. It's definitely not right now. But we try to, the reason we want to talk about markets on Lossdog, on One Lucky Dog, is because our long-term goal at this company and this network is to build a financial ecosystem. And we're focusing on digital, but to build a financial ecosystem where you have everything from stablecoin to digital currencies to borrowing capability to lots of other aspects that work around various payment rails. And again, the reason for that is because we want people that are watching our network to start to invest in themselves. We think it's really important that you begin to build equity. You know, wealth is created through equity, and that may be where you work, that may be how you invest your money. And so it's really critical to understand kind of the concept of how listed markets work, how free markets work, and essentially the concept of a bid-ask spread. What we're building right now is a bid-ask spread for you as an individual.
Which is awesome.
Cool.
We're trying to create a two-sided market for everybody.
It's awesome.
And I'm not sure that that's ever been done before, but we are building two-sided markets on our software, and then you can understand from listed software how effective, you know, those two-sided markets are. But anyway, in order to understand what's happening around the world and in order to understand what's happening with the economy, you know, like you can listen to everybody say, oh my God, the economy is in the shitter and all this kind of stuff. Well, the stock market's 1% under all-time highs. So I mean, you can think whatever you want, but investors aren't selling yet.
Correct.
That's the bottom line. And you could think that these NASDAQ stocks are grossly overbought, like I do, but
They're still going up.
they're still going up. I mean, they're way off their highs, but they're still going up. And there's been, you know, usually there's a little bit of like mixed, you know, there's like a little rotation, sector rotation every day. And today, I don't see it.
No.
Today it's
Strong to quite strong.
it's green across the board.
Strong to quite strong.
Yeah. So what we're going to do next in just a short 20 minutes after we just set up our phone system is we will let you call in. We're testing our phone system. We're testing how people like the call-in segment. We'll play it tomorrow night, but starting next week, we will do the call-in segment after the live show. And we're just going to test it today and play it tomorrow night. But if you'd like to hang on, if you'd like to ask any questions,
312-448-7032. We would love to hear from you in about 20 minutes.
yeah, and nothing at all is off limits. So because we're open. You want to talk about, I don't really want to talk about NASDAQ being up 240 today, but if I have to, I will. I don't really want to talk about the S&Ps being up 57, but if I have to,
We will.
it's a pain point for me today. Yeah, if you're wondering if we're still trading a lot, the answer is yes, we are. But it's all just part of our DNA. I think what's more important is that we're sharing everything that we know about building businesses and sharing everything we know about trying to help you, build wealth.
So, all right. So please call in again. Give us about 20 minutes. But otherwise, short week. Happy Thanksgiving,
Yes, happy
to
Thanksgiving,
everybody.
everyone.
Safe travels if you're traveling. And
What is your favorite?
Be safe.
what is your
Side.
favorite side dish for Thanksgiving?
oof.
What is your favorite?
I'm going to say sweet potato.
I'm not a sweet potato person. I love
Candy
stuff.
sweet potatoes.
Yes.
Candy sweet potatoes.
Well, I like with
I'm
the
more
roasted marshmallows on top.
I'm more basic. I like
I
a
don't
good
like the marshmallows, but
stuff.
I
I
like
like a
candy
good stuffing and a good mashed potato.
But I love stuffing. I love green beans. I love
Oof.
mashed potatoes and gravy.
Okay, my
I mean,
favorite
what's there
side
not to
dish
like, really?
is
candied sweet potatoes, like that are like kind of a little bit burnt and that kind of stuff.
Yeah.
Caramelized.
Caramelized. I was looking for that word. Caramelized candy sweet potatoes, and I do love stuffing.
I love
It's
stuff.
down
I love stuffing too.
I love stuff.
stuffing. And I'm making roast duck stuffing.
With,
That
What?
sounds
with
amazing.
mushrooms.
No mushrooms. My daughter does not like mushrooms. roast duck stuffing, and the last words Kay said to me on the phone this morning was, "Can't you do anything normal?"
Okay, I said no sugar
But
or
then
someone spoke
early in
until
the show,
that.
he said he was the only normal person out of all of us.
Of course, but it's always
No,
seasoned.
she's like, "Can't you
So-
do anything normal?"
Exactly.
No,
Based on
because
where
you're
I'm
not.
getting the roast duck from, she goes,
I
"Oh, great, we're having
understand.
cockroaches in our stuffing."
It's all right. So anyway, happy Thanksgiving.
Happy Thanksgiving, everyone.
Enjoy.